This week, we will start with the S&P 500, following comments from Mr. Draghi and Mr. Garuda from, respectively, the ECB and the Bank of Japan, leading to further easing over the next few months. So looking at the S&P, this is a weekly chart, so a long-term chart, and at the moment, we're still in a correction down, which has been underway since the second quarter last year. It is only a correction for now, and at the moment, as long as it stays above pretty much 1700 on the S&P futures, so that's about 1725 on the S&P index, we will still be in only a correction, and we could expect prices to move up again during the course of the year. This correction down is possibly not quite over yet, as we haven't reached the targets. Now, if we move on to the daily chart and look at the last few months in a zoom, we could see that we are in an impulsive downtrend, so a red price projections, and that it is not quite over yet. There's a bit more to go in terms of time and in terms of price, possibly into the lower 1800s, into the 1700s over the next few months. You can see that both our envelopes are touching each other, so that's a point of stress. And from last week, we could see a reaction, but it hasn't been enough to turn the trend. We could also note that we are now oversold, which may mean that we will soon be seeing a reversal, but it cannot be confirmed yet. Now, looking at the shorter-term hourly chart or the perspective over the next few weeks, we have reached pretty much the level of targets, but in terms of time, there's probably a bit more to go. We are oversold, or both our envelopes touch each other, so we see a bounce, but it would be a bit too early to call a reversal at this stage. Bringing it all together, you can see long-term correction down, medium-term into the impulsive territory, a bit more to go, and hourly pretty much reached the targets, but a bit more time. So 3 bears, potential continuous downtrend. Now, if we go on to the yen, which shows similar features, it is quite interesting to note. We could see that we're in a long-term uptrend, that it is quite an extended uptrend into impulsive 2 targets, but they still have a bit more to go, so we still have the possibility during the course of this year to reach above 130. We could see that the risk index has corrected down. It is not overbought at the moment, so that might justify that there's a bit more to go over the next few quarters. Moving on to the daily chart, we are in an impulsive down, very similar to what we see on the S&P, and it should have a bit more to go over the next few weeks in terms of time and in terms of targets. Yet, we are already oversold, so we're getting towards levels which might be interesting. We could see that there's been a lot of work in the past around 120. Making it above these levels would be a confirmation of a reversal up. Now, if we look at the hourly, we could see that the move since mid last week has created an uptrend, but yet it's still a gray uptrend, so it's only a correction. It would really need to make it above 119 and move into impulsive territory to start a stronger move that could turn the daily chart. Looking at it in a summary with all 3 charts, long-term bull still in place, although extended on the weekly, correction down, strong correction. It is an impulsive move down on daily, which could have a bit more to go. And the hourly is trying to buck this trend, but really needs to move above 119 to create anything meaningful. So potential resume up trend in a consolidation period, but we cannot confirm that all 3 trends are turning back into a bull yet. Now, moving on to the euro dollar is still in a long-term downtrend. There's not that much time left, but we would expect it to possibly reach parity over the next quarter or so. Now, if we move on to the daily chart, we were in a correction up. It seems to be reversing down. It is still labeled at the moment as a correction up, and possibly if it was to move back above 110, which has been a level of strong support and resistance over the past, we could possibly see 113. But at the moment, if you look at the hourly chart, we may be moving in the other direction. It's in an impulsive downtrend again, and possibly over the next few weeks could lead us back into the 106, 105 levels. Now, summarizing it up, we're still in a long-term downtrend, we're still in a consolidation up on the daily, and we're moving back down on the hourly, so it's a potential resume downtrend in a pullback period. Finally, looking at gold, We're still in a long-term downtrend on gold, although we're getting into the targets, so we're getting exhausted. We've been in the oversold, so there might be an opportunity here at some point. It's just too early for us to confirm it yet. Now, if we move on to the daily chart, we could see the correction up that we've seen over the last few weeks. It possibly has a bit more potential into the 1117, 1156 level. As long as it stays into these levels, it is still a correction. It would really need to move above 1156 to create a strong reversal up. You could see that our envelopes were touching each other and our index was oversold. So these were quite exaggerated situations. Now looking at the hourly, we're still within this correction up. It doesn't seem quite finished, and in first instance over the next few weeks could make it back above 111.10, possibly up to 11.25. Looking at the summary, well, it is a consolidation period with the two bulls here in a long-term downtrend, which you could see here. Thank you very much and have a good week.